Hey Rebels, welcome back to the channel, your home of no BS trading education. Today we're going to talk about manipulation. You're being manipulated. I'm sorry to tell you. But how can we potentially avoid this and potentially even profit from it? Now, if that sounds good, please like and subscribe, and we're just going to dive right into it. So I have right here a liquidation heat map. And what this is showing us are various levels at which if price breaches these levels, positions will get liquidated. So if you're going long here, a lot of people will put their stop losses at the range lows. And if price breaches that, they're going to get stopped out, right? And that those long orders will actually turn into sell orders. And the same with the top of the range here. If people are going short, they're going to put their stop losses at the range highs. And if price breaches that, they're going to get liquidated. All of those sell orders get turned into buy orders. So now I'll put this up on the chart and let's just kind of back up a little bit in the timing and say you notice Ethereum coming off of its range lows. It's been in this downtrend, comes off of this range lows. And now there's two ways to think about this. You might be a bull and say, hey, I think prices are going to go higher from here. So you put in a long position, say in the middle of the range. But if price falls below this level, then that kind of invalidates your thesis and you're going to get stopped out or liquidated. And the same with the short. Let's say hey, I'm not buying this. I think prices are actually going to go lower. So you put in a short position here and you put your stop loss right here at the range highs. Oh, excuse me. Let's drag this down. You notice this range, right? Put your stop loss right there. If prices go higher, that invalidates your thesis, but you're targeting maybe the range lows to the downside. Okay. Right. So you got something kind of looking like this. Two different theories. Markets made of the bulls and the bears, two different ideas of thinking. And so let's walk through what we know has happened is so far it seems like we're confirmed to the upside, but that was after a couple little fake outs, right? Because conventional knowledge says that if we breach the range highs, we're going up. If we breach the range lows right here, then we're going to continue to the downside. That's conventional knowledge tells us that whichever way price breaks out of this range is where it's going to go. Okay. So I've already explained where people would set their stop losses based on that conventional knowledge, and that shows up right here and right here, as I said. So let's just walk through what's happening from this moment on. Basically, just range bound. Nothing's really happened. Now, what happens is once price breaches this level right here, all of these sell orders get flipped into buy orders. That pushes the price a little bit higher. Now, the market makers and exchanges have their own sell orders up here. They're going to sell the market right here, and that actually pushes the price lower. Now, all the people who were trying to go short in this area got wiped out, and the exchange is making money all the way to the range lows. And then guess what happens? We breach the range lows now, and all of these buy orders get flipped into sell orders, pushing the price even lower, all the way down here to these areas right here. And exchanges also make money with liquidations. They're making money off of liquidations and their fees, if I didn't mention that before. Okay, right? So all these buy orders get turned into sell orders that pushes the price down even farther. And all of these liquidations happen down here too. And because the market got forced from these liquidations down farther, the market makers also have buy orders down here, and then the price quickly reverses. So basically, almost everybody in this range got screwed before price actually went to the upside where it was planning on going. Anybody who wanted to get short basically got fucked right here. The exchanges made money all the way down. Everybody who was trying to get long basically got fucked right here and right here. The exchanges had their buy orders down here, and price continued. Okay. So now I will caveat this. Do I know with 100% certainty that this is what's actually going on? Actually, I can't say that. I can't personally say that I know with 100% certainty that that's actually what's happening. But this is what I've learned over the years as the ways that, and I believe this is what happens? Yes, I believe this is what happens. Do I spend too much time thinking about it? I will say that I have spent almost zero time thinking about it in all of my trading because to me, it doesn't really matter. It is nice to know that, hey, by the way, price might actually wick below this of the range before going higher. It happens quite often. And so all I really want to know is, well, if this range is broken and we do have fake outs, that's what they call it. This was a fake out to the upside. This is a fake out to the downside. So instead of thinking about it as manipulation, maybe you can just understand that like sometimes price fakes you out. You think you're going farther down and you think you have it figured out and price reverses and you get fucked. Right here, I'm sure a lot of people thought they had it figured out. and then price reversed and they got fucked in the other direction, right? So I'm not really too concerned with whether the markets are being manipulated or not, but I do know that fake outs exist, and I think that some that might be honestly more just a more practical way to think about it. So if price were to breach down, where's the highest probability that we're going to see buying come in? And I've used this 50% tool quite a bit on the channel. And what that is the fib retracement tool with the settings 0, 0.5, and 1. It's just a calculator. This is the midpoint, and use this tool all the time to give us an idea of strength and weakness. And it also gives us potential areas to see buying come in if approached from the upside. And you'll notice too, this would have been a decent place maybe to put a buy, because this would have been resistance at one point, and conventional wisdom tells us that support or resistance can flip to support. Maybe you'd have your buy order right here, but you didn't quite make it. Maybe you look at the liquidation heat map and you notice these levels right here, and maybe you use that as a potential. Or if there's confluence between these liquidations way down here and that 50% tool, that might give you just a little bit extra confidence that that's where you're going to see buying step in. And so that's exactly what I did. That's exactly what happened. I noticed that Ethereum was coming off of the range lows, and instead of buying in this range here, I said, well, I'm not necessarily buying that we're going up immediately. And so, and I don't necessarily want to risk this yet. And I want to get a good entry. If we are going up from here, I want to get a really good entry. And this didn't necessarily, I mean, there's nothing saying that I would have hit this, but it just so happens that we did hit it and we got a really good buy. And now my break even is well below this range. It's a very safe place to be, very safe place to buy. I call this a stink bid. And so you can just basically just kind of a Hail Mary shot, honestly. And sometimes it happens. And then basically, if you were to zoom in here on the day, you can see it just got wicked in and wicked out. And let's see if I measure this, from here just into the middle of the range, 16%. That doesn't sound like much, but I mean, shit, 16% is like an entire year. That's like an entire year of S&P 500 returns on some years, right? So, making 16% in a few days, that's actually pretty good. Like I said, that's not where we're here. That's not what we're in crypto for. We're definitely here for much larger moves. But I wanted to just kind of give you guys an idea of, what conventional wisdom tells us about our trading ranges and how market makers might use that conventional wisdom to fake people out and capture liquidity and make money on both ends, basically, right? So they got their sell orders in here, they made money on their short, they got their buy orders in here, and they're making money on their longs. Basically, they're the market makers. They're the ones that have enough liquidity to move the markets around, and they know what conventional wisdom tells most people, and so they're going to take advantage of that. They say that exchanges are not supposed to take positions opposite to their customers, but I believe that it does happen. So again, I'm not going to worry too much about market manipulation. I would, again, think about it more as fake outs and how can you profit from that fake out. So I did kind of just cherry pick this particular instance because it was just a really good example that captured kind of both sides, how basically market makers manipulated the market and basically fucked everybody who was going short and everybody who was going long, and now prices are going up. And who's the one that made money? Effectively, the exchanges, right? Like they say, the house always wins. This is potentially one of those reasons. So anyway, hopefully that was insightful. Please like and subscribe. Leave a comment down below. Give me some ideas on videos that you would like to see in the future. Any questions that you have. I also have a Telegram group, link down below in the description. It's free, totally free to join. I have a lot of different market alpha. My trading results are all on there, and you can actually contact me personally. So just hop in the general chat, and we can always start a discussion. Happy to do that. That's what I like to do anyway. So anyway, hopefully that was helpful. Take care, guys. Till next time.